Hey, this is Crystal with another Tip Tuesday for you. Today I wanted to talk to you about the cost of waiting. With interest rates on the rise, they're pretty consistently creeping up and they're projected to continue doing so. I wanted to put into a numbers kind of data-driven explanation to you what that looks like. If you're kind of on the fence about buying now versus a year or two from now, but yet you technically do have the means to purchase now, this information is going to be hopefully encouraging to you to go ahead and start that look sooner rather than later. I've built a loan example and I used $150,000 as a purchase price and I used a $30,000 down payment. So basically we're looking at a loan amount of $120,000, which is pretty typical in the Kansas area. And obviously you can kind of estimate up or down based off of your comfort zone as far as your purchase price. But for now, these numbers are going to pertain to a loan amount of about $120,000. I started out with a 5% interest rate, and over the 3-year span, so I ran numbers for a 3-year spread to kind of show you the increase of what things are going to look like. And honestly, the stopping point, the 3-year mark, was pretty conservative. I stopped at 5.875. And frankly, it's projected to be higher than that a year from now. So rates are kind of, they're moving quickly, they're moving a lot, and then they kind of balance out. And it's a little unpredictable how they're going to go, but I feel like this is still a conservative look at numbers. So what I'm going to do is I'm going to put up a chart here in just a minute. And the first one's going to show you the monthly cost. So when we break this down, the additional cash required to get the loan closed is going to be, it's going to look like a rainbow, and I'll post that here in just a second. The second one that I'm going to show you is the cost of waiting in regards to the loan, and that's going to show you per month what the projected increase would be in your payment, as well as what your annual total would be of additional out-of-pocket expense that you've paid. And this way maybe you can see how it's going to impact your budget as well. So if you can get locked into a 30-year fixed rate loan, then you don't have to worry about these increases potentially happening on your property. So the first thing I'm going to do is show you this rainbow chart. Obviously this is going to show you that if you wait even just 6 months, you could have a $467 increase to what you need to bring to closing. And a lot of that is based off your interest rate. There's a little bit of property appreciation in there too. So this thing is projecting that the property little by little will be a little bit worth a little bit more as time goes on, which is natural for our area for sure. But then also the interest rate increasing. So when you take those things into account, 6 months could cost you almost $470 extra out of pocket. 1 year could cost you approximately $342 extra out of pocket just to close the loan, between maybe having a little higher purchase price because the property's worth a little more now and the interest rate being taken into factor. And if you jump forward 3 years, you're looking at $2,084 required extra out of pocket based off of those increases in appreciation of the property and your interest rate. So $2,000 extra out of pocket if you can afford to do something and close now. I mean, ultimately you're saving yourself money down the road. The next chart is more of the bar chart, and this is showing you your monthly savings per payment, because obviously your payment's going to be higher if you get locked into a higher interest rate 2-3 years from now. So even 6 months could increase your monthly payment by $48. That's almost 50 bucks. If you jump forward 3 years, then you're looking at approximately $115 a month extra. So again, that's going to be because maybe you had a little higher purchase price because the property's worth more and your interest rate's a little higher. So between the couple thousand out of pocket that you're going to have for closing, and then potentially somewhere between $50 and $100 extra for your monthly payment, it really is truly cost effective to look at purchasing sooner rather than later with all of these indicators that we're getting with the movement of the market increasing. So, it's good. It means we've got a good stable economy, but we're also starting to see the backside in the housing market is these little bit higher interest rates. So hopefully this is helpful information. I know it can be a lot to kind of process initially, so hopefully these charts are helpful. But if you ever want to look at some more specific scenarios to run for you that are customized, I'd be more than happy to do it. So hopefully you have a great day, and I'll catch you next week.